You're watching Themes Trading. Here in the studio is Peter Rosenstreich, Head of Market Strategy at Swissquote. And we're here to talk about global markets and the direction we should be thinking when it comes to investing. Now, Peter, let's start with this hot summer we've experienced around Europe. It didn't really play out well for the UK and EU negotiators. What happened? Were they on the beach?
I guess so, because they didn't really move the negotiations forward, and it's starting to weigh on investor sentiment. So they must have really been joining the Mediterranean because they didn't get much done.
Not good for the UK. Clearly, some reservations about spending too much, not good for manufacturers, very, very uncertain. What's the knock-on effect for Europe? Because we are seeing those interest rates come back to normalization.
Correct. You know, it's also starting to slow down. I think the aggregate effect of not having a deal on the table is affecting the UK and the EU. We're seeing the first half of the year in industrial production slow to almost recessionary levels. We're seeing retail sales, which was supposed to be the backbone of the EU recovery due to pent-up demand, slow to about 0.9%. So overall, you know, we're seeing a significant slowdown. And while there's some expectation that it's going to affect the ECB's decision, we believe that they'll stay on path toward normalization.
And of course, in the US, it seems to go from strength to strength. Interest rate hikes still on the table there to happen this year. And of course, happy investors at home, I suppose, because better returns on investment. Well,
the US equity markets are going like gangbusters, you know, from high to high. And part of it has to do with the very strong revenue and earnings on the corporate side. But on the domestic economic front, you have fiscal stimulus from the Trump administration. You have the fear of tariffs having companies spend more now so they don't get caught later, and a significant rise in consumer confidence, which then has pushed GDP growth to sort of a very hot 4.2%. And that means that the Fed is likely to raise interest rates by 25 basis points 2 more times by the end of the year.
What does it mean for the rest of the world, though, Peter? Because if I'm getting a good return on my investment in the US, why take the risk and go outside to, say, Turkey?
Yeah, I mean, that's the effect, the collateral damage of a higher interest rate in the US means that there's less yield-seeking globally. So places like Turkey that have a sort of a loose economic fundamentals, and less than independent central bank, very high inflation levels, is now feeling the brunt. We're also seeing a knockdown effect in Argentina. They've gone to the IMF asking for emergency loans. And even South Africa is now coming under the scrutiny of less yield-seeking investors.
And what about Italy? Where does that leave investors? Because Italy is really shutting out the EU at this point, saying, we don't want your ideas, we want to spend on our people to revamp our infrastructure. Should investors be very wary when it comes to Italy?
Part of it is this higher risk premium that investors are looking for. The other part is that Italy has elected an anti-establishment, anti-EU government that's now looking to sort of claw back some of its control. We have growth in Italy about 1.2%, so quite low. We have unemployment at about 11%, which is quite high. And people, because of the austerity program, the infrastructure has suffered significantly, hence why we had that tragedy just recently on the bridge. So they're trying to expand their budget, put in another $75 billion in spending, which should expand the budget deficit by 2 or 3%. That's against EU guidelines and making sort of the payment of debt really unsustainable at this point.
Protectionism is popular globally at the moment. Let's just take a quick look into the US and President Donald Trump. Tell us about these tariffs. Will it really strangled China when it comes to trying to thrive?
It's doubtful. I mean, you know, you really have to dissect where a tariff is going to be positive or negative for the U.S. And it's almost a very arbitrary number. When you put forward the steel tariffs, you obviously had steel production in the U.S., you know, get very excited, but then you had the manufacturers that were hurt. We saw the effect of Harley-Davidson. So it's very difficult to dissect who the winner and losers are. But what it does set the stage is that things like tariffs and protectionism is really going to be a defining driver for 2019.
And of course, trade was supposed to be what really set 2018 off in terms
Absolutely,
of growth.
and it could be the one thing that derails this sort of nice global growth, positive environment, and could be significantly negative for places like Turkey and Italy that are struggling to generate growth. So trade cannot, if Trump does manage to disrupt trade globally, it'll have a negative knock-on effect globally.
From everything I'm hearing, Peter, it's Europe, it's commodities, it's China. So when we look as investors at themes and trends and how best to play them, maybe you could just walk me through that. You've got your themes trading platform, so many interesting offerings there. Just to take a couple, what have you got here? You've got oil trading, for example. You're really betting on the fact that these oil prices are going to take off.
Yeah, well, we think that over the last few years, oil prices have been held down because of higher supply production levels. And we're starting to see an aggregate demand increase and oil prices creeping up. At the same time, we have the sanctions in November being put back onto Iran by the U.S., and that means that Iranian oil supply is going to be taken off the market. So we're seeing a reaction in Brent oil moving higher. And we think the oil complex will start improving from very low valuation levels.
And investing, of course, being all about timing and how to get that right and tap in at the right time. And you mentioned Europe, and you mentioned, the interest rates that are perhaps going to become normalized. So that's a good play for you right now, too.
We think so. I mean, it has a good number of financial institutions and banks in it. We still see, despite the slowdown in Europe, that the ECBs continue to normalize policy. So they'll decelerate asset purchases in 2018, and they'll start raising rates in 2019. And that should affect financial institutions and banks' bottom lines in a positive way.
And we did talk about China. Are you really sure about this theme right now, given the fact we don't know what's going to be the outcome of these trade tariffs between the US and China?
Well, as you mentioned, it's taken a significant hit. Valuations have come down significantly, starting with, early in the year with the Trump tweets, and then the tariffs and the sort of war that developed between the two. The interesting thing to notice is that in the start of the Trump administration, he had a very warm and cozy outlook on China, invited policymakers into the White House for state dinners, and we saw a rally in Chinese equities pretty starkly. It wasn't until the start of the year where he started turning on China, started going after them very aggressively, putting on tariffs, did we start seeing reduction in valuations in the Chinese stocks.
A very hot and cold relationship there. Now, you've chosen a few names here to be part of a certificate. Technology companies based in China, predominantly. Tell us about technology and how you really see that playing out, because I guess you don't really need to have much involvement with politics and economics when it comes to technology platforms.
I mean, I think that there are some key drivers that I think people need to keep in mind. First of all, the adoption of technology in China has been extremely fast. So despite having significant levels of sort of social economic strata, people at the lowest and the highest all engage online. It has a very high adaptation rate. So it's very good for online companies. Number two is that what Trump has done is basically divided the world into new sort of power structures. It means that China will be the dominant force in Asia. So by controlling that region, Chinese companies have the best opportunity for producing opportunities. So you have the combination of sort of a dedicated area just for them, for Chinese companies, combined with a goods and services that almost everybody in China uses. You have an extraordinarily positive outlook.
And not forgetting that some of the Western names are banned in China. I actually wanted to just do a little bit of background research for myself, Peter, so I had a closer look at Tencent, which is part of your certificate here. Take a look at this. Very few combine instant messaging, social media and mobile payment as successfully as Tencent's app, WeChat. Tencent is a $500 billion technology firm run by China's wealthiest man, Pony Ma. Besides WeChat, Tencent provides streaming music, dwarfing Spotify and Apple in terms of monthly users. is the most valuable gaming company in the world and is one of the biggest investment corporations globally, with stakes in American giants Tesla and gaming company Activision Blizzard, Snapchat and Sweden's Spotify. People often try to compare Chinese tech companies to a US equivalent, but there is no US equivalent to Tencent. With little mainstream competition at home where Facebook is banned, it dominates in a market of over 1 billion people. That means brands everywhere are trying to ensure that their products are promoted, liked and bought online in China and abroad.
It's very simple. We have to adapt our platforms to the customer. If the customer is on WeChat, why shouldn't we go there?
In November 2017, Tencent partnered with Germany's payments firm Wirecard to allow EU retailers to accept WeChat as a payment option.
I think going to the shop to see the watches first is good. Then buy them on the WeChat. If the price is cheaper, of course that's better.
WeChat is not only a platform for social network, but it's also very good because you can add a lot of videos and a lot of information. So our customer, they like this emotional and informative part very much.
Tencent is not without its issues. AOL accused it of copyright infringement over its first messaging service, OICQ, later named QQ. Ratings agencies cut it from their antivirus rankings following accusations over cheating. Chinese media complained that children were getting addicted to the company's games, and it was about to buy WhatsApp before Facebook swooped in and got it instead. Moreover, some are still afraid that what they're purchasing online may not turn out to be the real deal.
Maybe at the beginning I will see what kind of collections that are available through the WeChat, but after maybe I will come to shops. There are a lot of different collections that I can select. And also just a little bit afraid that I could buy fake ones from the WeChat platform.
WeChat Pay is used by Chinese tourists in Europe, but is yet to rival the likes of Apple Pay or its large Chinese competitor Alipay.
Whoever has a doubt about China should immediately try to think again, because it is just phenomenal what will happen.
You're seeing that little explainer about Tencent for the first time there. But based on what you know and what you've seen there, do you truly believe there are no global comparisons to the likes of Tencent? I
think it's hard to say that there are competitors. Tencent has done a great job building and controlling the ecosystem. So while you have Facebook, which is an enormous number of users, and they purchased WhatsApp for $22 billion a few years back, they haven't yet figured out a way of monetizing it. Tencent does that every day very, very well. So, you know, they have a complete offering that's well ahead of the competitors at this point.
So China online is a good play of our times, the oil recovery and the European renaissance. So thank you, Peter. Looking forward to hearing an update on this in a few weeks' time, and also some new themes, blockchain and cannabis. So stay tuned. Thanks for watching. That just leaves me to say happy themes trading.